Well, the stock market is not performing too well over the past few days and the past few weeks as a whole. So, in this video, we're going to be talking about my portfolio, how it has done this past week, if I've made any changes into it, and where I see the market headed and how my investment thesis is continuing to go. So, before I go any further in the video, if you enjoy dividend investing and dividend stock content, you make sure to subscribe to the channel. Enough with that, let's get into the video. So what we're looking at is the S&P 500, and you can see a lot of stocks are down. You got Amazon, Tesla, Disney, Netflix down 21% off of bad earnings and a bad report on how much they expect to make in the future, kind of their subscriber basis. PayPal is down 4.3%. This is honestly one of my top growth stocks, but I still have not invested into it because I almost feel like it's going to continue to plummet, but enough for that. We're not going to talk about that in this video. Let's go ahead and talk about my portfolio and how it has performed. My portfolio is currently sitting at $10,847 right now, and over the past week is down $471, which is 4.22%. Let's go ahead and talk about the sectors in my portfolio. There are 6 different slices in my pie. We have tech and cloud computing, which is down 5% this week. The income fund, which is just some high dividend yielding ETFs, which is down 3.3%. Banking, which is down 4.3%. Consumer and stores, which is going to be things like Altria Group, Home Depot, Lowe's, Costco. That's down 4.28%. Real estate, just a bunch of different REITs, down 5.08%. In restaurants and food, and this is actually only Starbucks, which is down 2.89%. Over the past day, this portfolio is down 0.57%. Now, the past month, and the past, just everything as a whole has really eaten up into my entire portfolio's returns. If we go to my all-time returns, we'll see I'm actually down 2.61%. Now, don't let that make you think, oh, he's such a bad investor or whatever. I was up roughly 7%, and the market is correcting. And when the market corrects, you're really left with only 2 options. One, you can sell all your shares and kind of move on and be like, investing is risky, it's not worth it, it's a fake scam. Or you can 2, buy the dip. And that's what I've been doing. I show you guys what I bought earlier. I bought it this morning, and I'll show you guys later in the video. But that's just one thing I want to stress is portfolios fall, and don't let it get into your head. Stay strong mentally, and make sure that you buy the dips if you're highly convicted and you have the cash available to do so. Not financial advice, of course. But what I'm saying is don't let downfalls in the market scare you. They're common, If we go look at the stock market right now, it's down 4.7% over the past 5 days. 0.28% more leads us to 5%, which is the actual definition of a stock market correction. So that would be very interesting to see if we can really be corrected. Because if we go, let's go ahead and look at the 5-year. The dip we're seeing, it's steeper than we saw in 2020. It's not 2018 levels, but it's almost getting there. And so this is just a potential, Think about whenever you really zoom out, if we could add another year onto this, think about if we just let's say we keep falling and it goes up, you're going to be really glad that you bought. And historically speaking, it does just uptrend. So be patient, continue to invest. That is my investment thesis, is to continue to buy valuable companies that I believe in for the long term. Now, if we go ahead and see, I did 6 buys this morning. I bought more in NVIDIA, JP Morgan Chase, Charles Schwab, Visa, Starbucks, and Toronto Dominion Bank. Now, I actually did make a little bit of a change in my portfolio. If you go to my tech and cloud computing sector, I switched this to 5% targeting and NVIDIA to 10%, while they were both just the inverses was 10 and NVIDIA was 5. I do think NVIDIA has a bright future ahead of themselves, so I wanted to add more into my portfolio of NVIDIA. Now, if we go ahead and look at my entire portfolio, this yield on cost used to be roughly about 3.6%. And my dividend yield used to be roughly 3.3%. As stocks have gone down, the dividend yield has increased, pretty simply put, and the yield on cost has decreased. Now, I'm okay with my yield increasing. I'm not going to complain about that. But in reality, it's not a good thing. I want my yield on cost to be increasing. And this can increase, decrease, whatever it might be. But this is the big thing, and it's dropping right now as my stocks, my portfolio, are actually falling as well. Now, my portfolio's beta is 0.95 with an annual income of $376 per year. If we go ahead and track my dividends, this is trackyourdividends.com. I'm not sponsored by them or anything. Just a really good website. It's 100% free for most of the features. I got paid a dividend this week from Store Capital for $1.59. That was the only dividend I was actually paid this week. But if we go ahead and look at the top of this, it tells you how much money you're expected to make over the next year. So in January, I was expected to make $46 in dividends, then February 19, and in March 26. And the whole process kind of continues to repeat. However, as I continue to add money in my portfolio and continue to buy stocks, especially at times right now like this, when the market is down and you're offered the best buying opportunity, this is when you need to buy. And this is when you can take advantage of getting a really good dividend yield on cost. So that is what I'm doing right now. My entire investment thesis is to keep buying into valuable dividend stocks, keep buying in ETFs and different things like that, and make sure to stay consistent and add money when I have the chance to and all that good stuff. You go look, like the NASDAQ is down 9% this month. The Russell 2000 is down 8.5%. NASDAQ 100 is down 8.43%. So we're seeing a lot of corrections in the market. So thank you guys for all watching this video. If you enjoyed it, make sure to subscribe to this channel. Turn on post notifications for all future videos. I always like to see your guys' input, so leave a comment below. Thank you again for making it to the end of the video. Use M1 Finance if you haven't already. Sign up using the link in the description or the pinned comment down below. If you sign up with that link, it'll say M1 Finance. Just sign up with the link right there. You deposit $100, you'll get $50 free. You could take it out of there and then use it for whatever. You can invest that money. It's a free $50 to claim. Claim it while you can. Thank you for making it to the end of this video, and I will see you at the next one.